Welcome to the Veterinary Financial Podcast, where we discuss financial freedom and professional success. I'm Meredith Jones, a veterinarian and financial planner for vets. One thing I see all the time, especially in Facebook groups like the Debt Free Vets group, is vets asking questions like, should I pay off my student loans or invest? Should I refinance? Should I do Roth or a traditional for my 401k? Should I buy a house? Should I take this job? And then 50 people jump in with 50 different answers. Some of those answers may be thoughtful. Some may even be technically correct, but that doesn't mean they're right for you. So I want to talk about why your financial decisions are too important to crowdsource and how to use online communities in a way that is actually helpful without letting strangers make financial decisions for you. Why do we crowdsource money decisions? First, I completely understand why people do this. Financial decisions can be intimidating, right? Sometimes you just want to know, what would other people do? Facebook groups, they're incredibly accessible, right? You can post a question and potentially have dozens of responses within hours. There's also something reassuring about hearing from vets who have been in a similar situation. Veterinarians in particular, right? We tend to have some financial circumstances that other people may not fully understand. We often have very large student loan balances. Our incomes can vary tremendously based on specialty, location, production, the type of work we do, and our incomes are often variable from one month to another or one quarter to another. Those variability, the variability in location, specialty, production pay, all of those things, that's worth keeping in mind when you ask for advice, because those differences can heavily influence someone's answer and shape what they see as normal or reasonable. Some vets change jobs fairly frequently, and many of us got, of course, a later start on retirement savings because we were in school for so long. And it makes sense to want advice from other veterinarians who understand some of that context. The problem is that having one thing in common with someone, right, being in the same career, doesn't mean your financial situations are the same. There's often missing context when someone asks a question. Sometimes it's because you don't want to share a detail, or you forget to share a detail, or sometimes you just don't know what you don't know. A question might sound simple, should I pay off my loans or invest? But no one can answer that intelligently based on that sentence alone. What kind of loans? What's the interest rate? If they're student loans, are they federal or private? Are you pursuing public service loan forgiveness? What repayment plan are you on? What's your income? Are you married? What is your spouse's income? Do you have an emergency fund? Are you saving for retirement? Do you have credit card debt? What are your other goals? How comfortable are you carrying debt? There may be two veterinarians who both owe $250,000 in student loans and earn $150,000 a year by themselves. For one of them, aggressively paying off the loans could make perfect sense. Maybe there's more income in the household than just theirs. For the other, it could be a very expensive mistake. So the number on the loan statement, it's only one piece of the decision, and that's true for almost every major financial question. Roth versus traditional is another example. Sometimes people will ask, for my retirement plan, should I contribute to Roth or traditional? And someone will inevitably respond, Roth, taxes are only going up in the future. Someone else will say traditional, take the tax deduction now. And neither of those is a useful universal rule. There's a lot to consider. Your marginal tax rate, your expected future tax rate, your income trajectory, whether you're pursuing income-driven repayment and student loan forgiveness. Your current retirement savings can factor into the decision, because what if you already have a lot of one or the other, pre-tax or Roth? And sometimes the best answer is not even one or the other. It may make sense to do both at the same time. If you ask 100 people what they would personally do, you're going to learn what 100 people would personally do. That's not the same thing as learning what you should do. And student loans are probably the clearest example of this. That's an area where crowdsourced advice can become very expensive. Someone might say, oh, I refinanced my loans and saved a ton of money, so you should refinance. And maybe they did. Maybe they had $60,000 of loans and a high income, stable employment, and no reason to pursue forgiveness with their loans. Meanwhile, if you have $250,000 of federal loans and you work for a nonprofit, then you probably shouldn't be refinancing. So those are not remotely the same decision. Another example is someone says, oh, just pay as much as you can toward the student loans every month. Debt is debt. And again, that may have worked for them. Maybe they paid their loans off in the 90s and their student loan balance was a lot lower than yours. Meanwhile, for someone pursuing forgiveness, paying extra toward the loans is a waste of money. And in some cases, if they spend that extra money, it's going toward interest instead of saving for the future tax bomb. And that could mean that they have a large IRS bill to pay in the future. So that's why I get nervous when I see very confident financial advice given with almost no information. The confidence of the person, as you probably experienced in school, the confidence of the person giving the answer does not tell you how good the answer is. So financial advice is the same. And some questions really do require an expert. So there's another category of question where I think the problem goes beyond just you need more context. Sometimes the question itself is something you shouldn't be relying on a Facebook group to answer in the first place. For example, can I break this non-compete? That's a legal question. The answer is probably going to depend on the exact language in your contract, which people are generally not sharing when they ask the question. It can depend on the state you live in, even the city you live in sometimes, what the current laws are there. And see, this is the kind of question where you probably need to talk with an attorney, not collect 40 anecdotes from people whose contracts may be completely different from yours. Another example, how much should I be saving for quarterly taxes for my side income? Or should I be doing that? That can depend on a lot of things. The number of shifts you're doing, your overall income, your deductions, withholding from other jobs, your spouse's income, your entity structure, prior tax liability, what state you're in. So someone replying with, oh, just save 30%, they might be giving you a rule of thumb, but that doesn't mean 30% is actually the right number for you. And honestly, that question is even challenging for a CPA or other tax professional to answer, especially if you're new at doing relief work, for example. And I see investment questions on other Facebook groups like, exactly what funds should I invest in? And people will start posting ticker symbols and telling you exactly what they buy or what they read people should buy without knowing anything about the person asking. Meanwhile, a financial planner would gather a lot more information about you first, like your age, your time horizon, like when do you plan on using the money, your risk tolerance, what other investments you have, your tax situation, what type of account it is, right? Is it a 401k, an IRA, a taxable brokerage account, or even what investment options are available to you? If it's an employer plan, they're going to be limited, right? So a Facebook group can be a good place to learn what kinds of questions to ask, but it's not the place to get individualized legal, tax, or investment advice. And I think sometimes people hesitate to pay an expert because it feels expensive. But if you're making a decision that could cost you thousands or tens of thousands of dollars, paying someone qualified to look at your actual situation can be money very well spent. And there's also survivorship bias. So there's this thing where depending on someone else's experience, that of course can color how they perceive financial decisions moving forward. So another thing to remember when you crowdsource financial decisions is people are naturally going to tell you what worked for them. Let's say somebody bought a house in 2019 and they made a lot of money. So they tell you buying is always better than renting. Someone maybe invested aggressively and happened to experience a great market. And so then they're going to tell you keeping cash is foolish. Someone paid off their student loans in 3 years and, of course, felt an enormous sense of relief. So they tell everyone else to do the same, even if it's completely unaffordable for them. And those experiences are real, but personal experience is not the same thing as a financial analysis. People often don't know, of course, what would have happened if they had chosen the other path, or if they chose the same path 5 years later. They just know that the path they chose worked out reasonably well. And so online advice, it tends to strip away trade-offs that people are making. Most financial decisions, of course, involve trade-offs. There's usually not one option that wins in every category. Paying off debt may give you certainty and improve cash flow later, but investing could produce a higher return. Buying a house may provide stability, but it reduces flexibility. Traditional retirement contributions save you more in taxes today, while having some Roth dollars can give you tax flexibility later on. Keeping more cash may lower your expected return, but it gives you options. Good financial planning is often about choosing which trade-offs matter most to you. Crowdsource advice tends to turn those more nuanced decisions into this is good, this is bad, never do this, always do that. Personal finance is personal, and it rarely works that way. Should you stop asking people financial questions? Is that what I'm saying? No. I actually think those conversations can be incredibly useful, and that's part of why I started the Debt-Free Vets Facebook group in the first place. Online groups can be great for helping you figure out what questions you should be asking. You might learn an option exists that you've never heard of. You might learn about a student loan repayment plan that you need to investigate or a strategy you've never heard of. You may discover that other people have negotiated a particular benefit or handled a similar situation in a way that you haven't even considered. And that's valuable. But the distinction I would make is this: crowdsource ideas, but don't crowdsource the decision. Use the conversation to expand the possibilities you're considering, and then take those possibilities and evaluate them based on your actual financial situation. And if the question crosses into legal, tax, or investment advice, recognize when you've reached the point where the right next step isn't another Facebook post, it's talking with someone qualified to advise you. And I would extend that to student loan questions as well. Be especially skeptical of absolute statements. It's just like when you took exams in school. Every time you see words like always, never, everyone, obviously, or it's a no-brainer, I would slow down. There are certainly financial principles that apply broadly, like spend less than you make, have an emergency fund, take advantage of an employer match when you reasonably can, diversify your investments. But then once we move from general principles into major personal decisions, the answer often really is, it depends. And it depends isn't a cop-out. Sometimes it's the only responsible answer until you know the details. So before making a major financial decision, if you're trying to decide what to do, ask yourself, what information would actually change this decision? What assumptions am I making? What are the potential downsides of each option? Is this decision reversible? And how expensive would it be if I get it wrong? So that last question's important, right? There's a big difference between crowdsourcing what budgeting app people like and crowdsourcing whether you should break an employment agreement, make a decision that has tax implications, or refinance $250,000 in student loans. The answer is generally no to that last one, by the way. The higher the stakes and the harder the decision is to reverse, the more careful you should be about whose advice you rely on. And of course, online communities can be fantastic places to learn. I run one myself, and I'm certainly not telling you not to participate in them. In fact, please participate, and please use your own name. And ask questions. Read other people's experiences, learn what has worked for them, and use those conversations to become a more informed financial decision maker. Just remember that the person answering your question probably doesn't know your entire financial life. They may not know your goals, your student loan strategy, your family situation, your risk tolerance, or the dozen other financial details that could completely change the answer. And sometimes the person answering is not qualified to answer the question in the first place. Your decisions, especially your financial decisions, they're too important to make based on whichever comment gets the most likes. So crowdsource the questions, crowdsource the possibilities, but then make the decision based on your own numbers, your own goals, your life, and when appropriate, take advice from someone who actually has the expertise and the context to help you. And if you're at the point where you realize your financial questions need more than just a Facebook comment, that's exactly where personalized financial planning can help. Thanks so much for listening. Our goal is to help you take control of your finances and build a life you love. If you'd like to see how financial planning can support your goals, visit allvetfinancial.com and click the Book Now button to schedule a free intro call. And until next time, take care and continue your path to financial success. This podcast is for informational and educational purposes only and should not be considered individualized financial advice. If a specific investment is mentioned, it should not be considered a recommendation or endorsement to buy or sell the investment. All investments involve risk. Past performance does not guarantee future results. You are encouraged to seek the advice of a financial professional before implementing any investment strategies discussed. Yay, compliance!